Good morning, everyone. I see that we still have some people joining us, but we'll get started here. I'm Jessica Twemlow from your communications team, and I'm pleased to welcome you to Listen Up Live Q1 in Review. I don't know what it's been like in other parts of the province, but the smoky haze that's been hanging over Calgary has given way to some blue sky today. So I'm feeling particularly happy and really looking forward to some engaging conversation this morning with our leadership team. As a reminder, on the agenda today, we have an introduction to our new Vice President of Advisory Services, a financial update, a panel discussion on reimagining work and investor services, and finally an update on our promise to clients. Before I turn things over to you, Chris, just a few housekeeping items for everyone on the call. Tracy has muted everyone to eliminate background noise. To ensure you are fully present, please do turn off your cell phones. We will have time for some questions at the end. If you think of something sooner and you don't want to forget, feel free to type it into the chat and we will come back to it. And finally, this session will be recorded and shared in fine print. And with that, Chris, I will turn things over to you.
Thanks, Jessica. I'm not sure if it's the smoky haze has gone away, just for the simple reason it's what my wife and I like to call the greatest time of the year, which is the time when our kids go back to school and normalcy sort of starts to creep back into our life. And it does make every morning a struggle to get our girls up, but they've managed to make it through the first week, which has been great. I was thinking and just reflecting on, the importance of timing and just how timing can have this impact. And if you look at clients that signed up and became our clients in the last 2 or 3 months, the timing that they've had, as a result, they've experienced some negative volatility. And talking to a number of advisors, that has required advisors to spend more and more time sort of coaching those clients through, compared to clients that would have signed up 2 or 3 years ago and would have had relatively easy sailings. On the flip side, another great example of timing is before the girls went back to school, I took a few days off and I missed an email from Neil Loach, who was wanting to bet me on the Labor Day Classic. That's just a great example of where timing worked out into my favor, as things didn't turn out very well for the Eskimos. So with that said, I ask you to take it easy on Brett later on in the call, as Brett is a huge Eskimos fan and is struggling through the morning after the difficult losses back to back. It's interesting, if you look for years, both the Oilers and the Flames, and I'll continue the sports analogies, but the Oilers and Flames were having difficulty attracting sort of top talent free agents. A lot of people would have said the reason was that there was the cold weather, the poor weather we have in Alberta, was the difficult travel schedules. But the reality is both organizations, although it's hard for me to admit, but I'll say it, Calgary was better than Edmonton, but both organizations weren't very good. And as a result, that was the main reason they weren't able to attract top-end free agents. At Investor Services, if you look back over the last 15 years, we've spent time developing and bringing together top talent. And it's because of that we've been able to attract top talent. Some of the talent that you may have known that is on my team, and there's other members of the team that you may not have known or you may not have heard about who have been with us for a couple of years and who will be joining on the call today. So I want to highlight some of them. Heather Lestuca will be joining us. Heather's our head of talent. Brett Kimak is our chief risk officer, head of compliance. He'll be joining, as well as Andrew Reed. These 3 critical members of the team have been with us for give or take a year to 2 years on the team. In fact, Brett just celebrated his 2-year anniversary just last week. So I want to introduce them. Sherry and Tony, and I think everyone knows who Sherry and Tony are. And if you don't, maybe send me an email, because I'll definitely set up a lunch or a coffee with you guys and Sherry and Tony. And then lastly, I'm thrilled to be able to introduce Gary Whitfield. Gary, like free agents in the hockey world, had numerous of choices of where he wanted to go, where he wanted to continue his career. And given Gary's extensive background, whether it was at CIBC Wood Gundy, leading Wood Gundy for Western Canada, whether it was leading private counsel and private banking nationally for CIBC, or the time that he had spent overseas in wealth management, he had a number of different opportunities to choose from, and he chose Investor Services. He saw the success that we had had. He saw the focus we had put on developing individuals, and that aligned very well. And Gary's skill set of developing people and helping people be their best, is some of the things that attracted Gary to us and us to Gary. The fact that we're trying to do things different and that we have a people-first strategy. So with that, I'm thrilled to introduce Gary Whitfield and have Gary say a few words before we continue with the call.
Great, fantastic. Thank you very much, Chris, for that very kind introduction. Hopefully everyone can hear me all right. I really just wanted to use the opportunity to say hello and to say how pleased I am to be part of the Investor Services or AtBiz team or family. I'd like to thank everyone for their warm and enthusiastic welcome. I've only been here for 2 weeks, but I have to admit I'm certainly starting to feel at home, and I think that's a reflection of not only the people, but also the fact that I think I'm very aligned to this firm and our culture. I know we have a lot to cover today, so I'm not going to go into a lot of detail regarding my career experience. Chris, you've obviously provided a couple of highlights. I would say that I am actually celebrating this month my 30th year in the industry, having started in September 1987, about 30 days before the crash. And you know, in terms of an important point in my life, that was huge for me because it really galvanized my desire to be in this business. And what's my reason for sharing this with you? Other than probably tipping everybody off in terms of what my age is, it's really to highlight the amount of change that I've experienced during my career. And Chris, I think you've said that well. I think the change in our industry is not slowing. And so our ability to adapt is going to be critical going forward. And that's why I'm so thrilled to bring all of my experience to AtBiz. It was a major decision for me to change firms, but I would say that once the decision was made to change, and then I would say the second decision point that my family made was that we wanted to remain in Alberta. It really became a no-brainer. ATB was our preferred destination, and there's a number of reasons for that. One certainly is that I've seen a lot of great people drawn to ATB over the years, and as Chris mentioned, talent is by far our most important asset, and I think that speaks a lot to the culture to be able to attract talent like this. I've always admired our culture, unique culture, passion for clients, and commitment to innovation. I've already seen a lot of signs in the last couple of weeks about our ability to deliver financial services in a very different way. And if I bring that a bit closer to home at Investor Services, I really do believe that we have an offer that's the envy of other banks. Not only are we more client-centric than most of our competitors, we also don't have a lot of the channel, what I call channel confusion or conflicts that exist in most of our banks and must make it very difficult for clients to navigate them. We have people that are passionate for doing what's right for the client, but I've also really learned to appreciate in the last couple of weeks just how committed our people are to our fee-based and institutional style of money management. And I think that bodes well for us going forward. Our business has experienced tremendous growth, and Miles and the rest of the team should be commended for that growth, especially during our recession. Having said this, our economy is starting to improve, and although we have seen some volatility enter into the markets over the last couple of months, I believe this volatility actually favors our offer, and so that we should continue to grow and gain market share. Just close by saying I look forward to working with everyone on this team and meeting you in the near future. Hopefully I have a chance to meet most of you face-to-face before our conference in October, but worst case, I'll see everybody there. Thank you very much. I think I'd turn back to Jessica.
Great, thank you, Gary, and congratulations on celebrating 30 years. That's quite a milestone. Welcome to the team. I'm looking forward to meeting you in person soon.
Thank you.
Now I'd like to introduce Ursula, who is going to provide us with a financials update.
Thanks, Jessica. Good morning, everyone, and welcome back from the summer, and welcome, Gary, to AtBiz. I have the fortune of sitting with you here at EAP, and really my team and I look very much forward to working with you. So I'll start with providing everyone with some context in terms of what we set out to achieve at the beginning of this year at a high level so that you can all assess how we're doing relative to those targets. We started the year with a plan to grow our total assets by $2.2 billion, and of which $1.6 billion would come from gathering efforts, and then the balance, or roughly $600 million, would come from market growth. Our earnings goal was 46.4 million, and we left this target at fiscal 17 levels intentionally because we made the very intentional decision to reinvest in our business this year to make sure that we're optimally structured to deliver on our 5-year plan, which will finish up in the year that APIS turns 20 in 2022. So our two big initiatives have been the organizational redesign across all of our business units, and that work started last year. And then secondly, the segmentation change, which will ensure that we provide the best possible experience for clients in each segment, and which will also see us hire up to 50 new FAs or FA1s to help grow our book organically. So those are the high-level metrics. So how are we doing? So we grew our assets by 456 million in Q1, and you won't see that number on the slide, but that gathering accounted for 71% of that total increase of 326 million, which is on the chart. Market growth contributed another 131 million, or 3%, which is just slightly below the 3.7% that we forecast under our most realistic scenarios. And I think at the end of August, we're actually seeing markets now flat or slightly negative on our book. Our total Q1 assets came in slightly below plan at 17.2 billion. And the real story here was the positive lift that we got from the slowdown in asset removals as the economy started to recover. So that's a nice story. And to give you some more context, our asset removals in Q1 were only 53% of assets gathered, and compared to last year where they were 94%. So that's a pretty dramatic improvement and a trend that we really hope will continue over the balance of this fiscal year. So where we're lagging behind plan is in the senior FA segment, which has only achieved slightly over half of its productivity target for the year. But we've got Gary here now, and we are very confident as an executive team that he and his team will actually reignite growth, and he will receive very strong support from the rest of the business to do so. Another positive story. Sorry, I'm getting some echo there. Can you still hear me? Yes? Okay. Another positive story is that we have outperformed the industry in mutual fund asset gathering by 4% compared to only 1% a year ago. So that means we're off to a much better start with respect to achieving our short-term incentive pay targets in fiscal 18, which is nice for anyone who's got a scorecard, of course. And then looking forward to year end, we need to gather another 1.3 billion in total assets, or roughly 430 million per quarter on average across all of the segments, and that would exclude any contribution from market growth. So that's the asset summary, and moving on to revenues, we're actually delivering very healthy growth year over year of 17%. Our revenues reached $47 million at the end of Q1, and that actually represents a 12.7% of ATB's total revenue. And that's also a 20% increase in that metric year over year. So I would say that we're tracking very nicely towards that aspirational 20 in 20 goal, which again is to contribute 20% to ATB's total revenue in fiscal 2022. Across our core revenue streams, all the growth rates are still very strong, with the exception of, I'd say, third-party mutual fund sales, which were down 9% year over year. That's not a surprise at all to us because we're continuing to see inflows of assets into Compass. And with our deep penetration of 76%, which I think everybody understands, simply means that our products make up roughly 3/4 of our overall book. From a year-end perspective, we're hoping to finish with revenues at $196 million if asset mix continues to improve, and if we continue to see the really good growth that we've seen in both fee-based and managed revenue. Revenue growth overall continues to also outpace our expense growth, which we weren't expecting, but it's another nice story at this time of the year, and that's what's allowing us to actually deliver a 26% improvement in year-over-year earnings to 13.3 million in Q1, and that number is on a pre-pilot basis, and it's also 2.7 million more than what we made last year in Q1. And just to remind everyone that pilot is a notional tax that we do actually pay to the government of Alberta through ATB, and it's charged to us at a rate of 23%. So we always quote earnings on a pre-pilot basis. Our earnings are also a few million better than plan or our budget at the end of Q1, and that's due mostly to timing differences that we're seeing in hiring people, training and development, some consulting spend, and also just some lower charges than what we expected from ATB. But we are expecting that this savings gap will close by the end of the year as our leaders continue to execute on their redesign plans and restructure our business. So from an enterprise or ATB-wide perspective, we are making a much larger contribution to ATB's overall objective of growing their other income and reducing their dependency on spread income. So for Q1 this year, we actually contributed 44% to other income, and that's up from 39% last year. So another good story. So moving on to dividends, given that our earnings forecast is remaining flat this year, we're forecasting again a $30 million dividend to ATB. So that's exactly the same as what we paid last year. And this means that the annual distribution to achievement note holders will not change either, and it'll remain at that $63 mark on the year. Now, forecasting the dividend payout requires us to monitor our earnings throughout the year, monitor our regulatory capital, our strategic capital, and also our strategic growth alternatives. So we may adjust that dividend over the balance of the year if conditions play out differently than we expect, and if, of course, our board agrees with us that we should change it. And then lastly, enterprise value. Given our investment in the future, we're going to see a pretty significant slowdown here. Enterprise value grew 20% last year, and we're expecting only 8% this year. But the note price is expected to approach the $1,200 mark, which again, I would say is a pretty good story, given that we issued those notes only 9 years ago at $100 per note. And then lastly, I'll just close with what I think is a really interesting stat, and that's the fact that ATBIS's year-over-year total revenue growth actually outpaced ATB's by 14% at the end of Q1. And I think that clearly confirms the importance of us continuing to reinvest in our business and also helping ATB transform into a digital bank. And that's my summary, Jessica.
That's great. Sounds like that's a good stuff going on, and we have a busy but exciting quarter ahead of us. So now, for the next 20 minutes or so, we're going to be hearing from Andrew, Brett, Tony, and Heather, and they're going to be sharing their vision for what it means to reimagine work within investor services. From Google and Salesforce to business process optimization and the Appim application renewal, we have lots of exciting things happening. And we know everyone is eager to hear what's been accomplished so far and what's coming up next. So with that in mind, I'd like to ask everyone the question, what does it mean to reimagine work? So let's pause for 30 seconds and have everyone share their answer in the chat field. What does it mean to you to reimagine work within investor services? Great responses coming in. Great. Well, we won't leave it to dead air for very long here. See lots of great responses coming in. Heather, I'm going to turn things over to you so you can share what reimagine work means to you.
Thanks, Jessica. Continuing the trend, it sounds like, since Gary subtly revealed how old he was with his timeline, I'm going to share a story of growing up. I grew up in the north end of Winnipeg. We didn't have very much, but I remember the day that we got a dishwasher added to the house. We went from washing dishes by hand to washing dishes with some kind of mechanical device. And the reason I refer to it that way is because it didn't look anything like what our modern day dishwashers look like now. At that time, it would be wheeled in from a closet and long hoses attached to our faucet, and then the water would run literally from the faucet into the dishwasher and would get them done for us. Nonetheless, as much as that was still clunky and challenging and not as smooth a process as what we would have today in our built-in dishwashers, it certainly took what was a family amount of dishes down to a much simpler process of just loading the dishes, turning it on, and then unpacking. It cut down the dish time by at least half. And today, without having to do the hookups to the faucet and having it fully built in, energy efficient, higher temperatures at lower energy ratios, all of those things, our dishes are done in an even faster time. There is no having to put the whole mechanical piece away after the dishes are done too. Gaynor remembers it as well, so it means clearly some of us have been around for a while. And I still have to do my own dishes periodically, although my kids are growing to the age where that's now assigned out. But to me, that's a good example of reimagining work. It takes the things we do on a regular basis, even the most mundane of our tasks, which I would put washing dishes in, probably even the ones that I hate the most. I'd also put washing dishes in there too, and take it from the job that needs to be done and might even be painfully needing to be done to getting it more efficiently and more effectively done, and then continuing to reimagine that process as we go along. We have an ATB that would say that we're continuously reimagining the way we do the work and finding ways to make investing and banking work for people. That ATB also is essentially what we mean by reimagining work. It's looking at all of the processes, big and little, and finding ways of doing them in more effective and more efficient ways. And some of our team members here have called out some great ones too. In some cases, it's full automation, fully automating things. In others, it's finding ways to get more out of the same process. In other ways, it's eradicating the process completely and finding ways to use our resources and our time in more effective, more meaningful ways, like creating investor experience, fulfilling the promise, and being able to deliver on the things that we commit to in a more effective and efficient amount of time. We have a couple of examples of ways that we are reimagining now. We've had some changes in the way we use our Google tools, of course, but we tend to sort of refer to reimagining as specifically our Google tools, and it's actually only one of the ways that we're going about it. We've had functions or full, groups who are changing the way they share information and work with information using OneDrive, whereas before they would be emailing and sending attachments to each other. They're now able to get right into that, right into those documents and actually craft and develop them without even requiring meetings. In other cases, we've moved entirely from folders and files held separately on the network and are now easily accessible on the drive. One of the cool pieces about that is that we've eliminated a process of having to add people to drives through TSRs and being able to do that ourselves and update them ourselves. So it's made very small steps like waiting for those TSRs to be approved gone, and we can now work more quickly in that way. And then we have more complicated ones like business process optimization. This would be a good example of more complex looks at our whole end-to-end systems and processes and finding ways that we can reallocate our resources in more effective and more efficient ways, and ways that we want to have more meaningful work rather than just crunching away on data entry or data processing, or even worse, error fixing. And Brett's going to talk more about what those examples might look like. Thanks, Jessica.
Yeah, thanks, Heather. I loved your dishwasher analogy. Based on the comments coming in, I think you're in very good company.
There's a lot of other people who
lots of people remember that. Yeah. So, and reimagining really is more than just new tools. And I like to think about how we could stop, start, or continue doing the things we currently do. And that does bring to mind the business process optimization work. So, Brett, the next question is for you, and wondering how you would describe business process optimization, what's already been achieved, and what can we expect next?
Sure, thanks, Jessica. Yeah, I mean, business process optimization really is a mouthful. But what it really is it's a very ambitious, formal project to look at all of our core processes front to back. Our business is really complex. The challenge is that processes, as they kind of develop over time, tend to get a lot more complicated than the business actually needs. They tend to grow like vines. So what we really need to do right now is, quite frankly, prune those vines back. and ask a lot of really hard questions about what our core processes are and what they need to look like. We've had some really good recent wins around things like implementing DocuSign for NCAFs, streamlined processes for ATB Prosper. So we've shown that we can do it. We've shown that if we really, really want to be effective in streamlining what we do, we've been successful. So we've got to take that to a much bigger stage right now. To kind of come back to Heather's dishwasher analogy, we have a dishwasher right now, and its name is WMF. May not always work and always come out clean, but we have one. But we're replacing it. We're pulling that dishwasher out, and we're going to put in something new to replace it with the Salesforce implementation. So what we don't want to do, quite frankly, is load the dishwasher the same way. I actually just went through this. We just replaced our dishwasher, and I'm used to putting the frying pan always in the same place, and doing that right now causes a disaster. So we have to fix that, and we have to fix that before we really get into implementation to make sure this is really, truly reimagining. If we take our current
Is Salesforce for everyone?
Well, it's everyone that would
we exist not simply to manage people's monies, but to help make people's dreams and aspirations closer. When the story was launched, I think we all questioned, how relevant is this story to investor services? I think the great thing is you can see when you read the 94 words, you can see that the story is really rooted in the DNA of investor services, and that investor services from our history was a driving force in the creation of the story, the creation of wanting to do things different and not wanting to be like all other banks. So for us this spring, to make the story true, we made a public declaration to Albertans. We made a declaration asking Albertans to speak up about practices that they thought were unfair, to speak up about the lack of transparency, the lack of understanding, and most importantly, speak up about the fact they weren't comfortable in the fact that they were on track to reach their long-term goals. But as important as the public declaration was, it's important for us to bring that down to a client level. And that's where the promise comes in. The promise is a promise that we're making to each and every one of our clients to show our unwavering commitment to our clients and to put their interests above ours and to put their interests above everything else. Saying the promise is easy, but living and acting the promise day in and day out is difficult. It's difficult when we know our competitors will oftentimes do things to shortcut this, to sell a story, or to sell something to our clients that they know will resonate, instead of taking the road less traveled, the longer and more difficult road. And that's why we've come out with the promise. Sherry and Brett will talk about how we can use the promise, but I'll just go through the promise with everyone here. I'm proud to be an ATB Investor Services investment professional. I hold the outrageous belief that investing can change people's lives for the better by making their time richer, their aspirations closer, and their happiness deeper. How will we do this? By doing things other investment firms don't do. To be worthy of your full trust, I promise to listen to your goals and aspirations and tailor my advice to you. Have your best interests at heart and share any conflicts of interest. Be honest, straightforward, and transparent. Communicate in a smart, simple, and helpful ways that are relevant to you. Ensure fees are fair and clearly explained. Take accountability when things go wrong. Leverage my expertise and diligence to benefit you. Guard and protect your confidential information. Call out unethical behavior. And lead the investment industry. As I said, lead the investment industry with courage. This is my unwavering promise to you. So that's the promise, and now I'll pass it on to Sherry to talk a little bit about how we can use the promise.
Good morning, everyone. As Chris said, it's ironic that the gentleman on the phone did not talk about the dishwasher saga, that story that Heather brought up. I can say I also recall those good old dishwashers. Yeah, I can see you nodding your head, Terchansky. I had one of those when I was a child as well. But nowadays, I would like to tell you that 11-year-old slavery is actually the best kind of dishwasher that you can have, especially little boys. So that's my connection to the dishwasher story. So I hope you've all had a moment to, after Chris read it, to continue to read it again and again, because it is still on the screen. I have to tell you that one of the reasons why I'm so excited to share this with all of ATB Investor Services today is it's not just for advisors. Yes, this is, it makes a lot of sense when you read it for an advisor to say that and, treat their clients like that. And our advisors already live up to this. We just put it on paper, right? And all the interviews I did when I was, meeting with the advisors at the beginning of my new role, this is what we believe in. It's who we are. It's been our foundation. And now we've just articulated it in a way that everyone can understand. But it doesn't matter if we're not client facing. We still contribute to this promise. We rolled this out to the advisors at the beginning of June. And a lot of them shared stories with how they were already, using language like this with their clients. And as you read it, no matter what group you're in or what areas we support our advisors and our clients from, we still protect their confidential information. We still have to be honest and straightforward and transparent. This is something that we as an investor services team member, each and every one of us, have to live. And so I really hope that whatever your role is, you can see a piece of this that you have to live up to as well, if not all of it, obviously, because Brett's going to kill me for saying a piece of it. But I hope there's at least one small moment, like one small line or word in there that really resonates with you. I also wanted to share with you some of the things that advisors are already doing with this. We have a lot of different collateral that the communications and marketing team did for the advisors. There's posters that they've put up in their offices, there's postcards, but I think some of the coolest things that I've heard, because it's not a marketing campaign, this is truly who we are, and we're just trying to find the best ways to help advisors have those great conversations with clients, but we as team members can also be sharing this with our peers in other areas in ATB Financial to really help all of ATB Financial understand what we stand for clients. Lots of our advisors have been using this, in their annual review process, in initial meetings with clients. We've also had some people send out letters to clients just to open up the conversation around, this, in case I haven't articulated it really clearly before, this is what I've always done for you, and here it is written down. So we're really proud of that. And I think what I want you to take away from this is, those are my dogs barking, that it's for all of us. It's not just for advisors. It's not just for client facing. It's for all of us. And with that, I'm going to turn it over to Brett.
Thanks, Sherry. Yeah, I think you really said it best. I guess the most important thing I really want to say is, very deliberately, this isn't, even though I'm talking about this part, this isn't a compliance requirement. We made a very deliberate decision not to say you must do and make this somehow a compliance thing, because once you make it a compliance thing, it becomes a tick the box exercise. The promise and the expectation that we're delivering on it, that we're sharing it, we want to do that because we believe in it. We want to believe that because it's part of us. And as Sherry said, this isn't something that we haven't been doing. This is now the paper representation of things that we've believed for a long time. So we've wanted to avoid making this a form or something else you have to get a signature on. But we want people to share it because this truly is us. And it's not a marketing campaign. It's not a commercial. This is really the embodiment of who we are. And there really is the expectation that we will be talking about this. We'll be sharing it with clients. We'll be sharing it with our partners. It's important that people understand that this isn't just a piece of paper that we have, that we've put out yet another campaign, but it's important and we want to share it. We want to tell people about it. Maybe most importantly, it's not going to be up to compliance or anybody else to hold people accountable for delivering on the promise or sharing the promise. But we do have to be fiercely and personally accountable individually for holding each other accountable. Again, it's not a compliance. This is something that we all need to do, and we all need to hold each other, fully and transparently accountable for delivering on this. So, it's an exciting thing to have, and probably not the last thing we talk about in terms of behaviors and how we get these behaviors really, integrated into what we do. It's a great lens when we look at our processes and how we use it throughout all of the development work that we're doing to say, are we living up to this promise? So with that, I think I'll turn it back to Jess.
Great. Thanks, you guys. Really powerful stuff. See lots of conversation happening in the chat as well, different ideas for how people would like to have and share the promise. So we'll follow up with some of those. Now, we don't have a lot of time for questions, but if you do have something that you would like to ask any one of our leaders, please put it into the chat and we will start answering those now. In addition, if we don't get to something today, please feel free to send your questions into listenup@atv.com, and we'll be gathering some of those questions and either responding directly or sharing those through fine print. So let's see. Oh yeah, talking again about some different ideas for how we can share that. something for the laptop covers, different ideas. So we'll take that away and leave that with our marketing team to take a look at some of those. Will the implementation of Salesforce be slated for after March 2018? That's from Jackie Cullen. Tony, did you want to grab that question?
Sorry, can you repeat it?
Will the implementation of Salesforce be slated for after March 2018?
Yes. Yeah, so the soonest that we anticipate any rollout would be probably May. And it'll probably be done in a staged rollout, so we won't sort of hit the whole team with everything at once. So, and so you'll see sort of a spring initial launch, and then probably subsequent launches over a few month period till it's fully rolled out.
Great, thank you. Any more questions? Lots of excitement, you guys, around the promise, and lots of ideas for how we can share those. So Sam's just made a comment here. She's going to take those away to the marketing team for you. So obviously, we're excited to help deliver this in lots of different ways. All right, you have another 2 minutes if you have a question now that you'd like to ask. Otherwise, again, feel free to send those questions into our listenup@atb.com mailbox, and we will get an answer for you to any questions that you've got. All right, well, it's pretty quiet on the chat, so if we're done here, I think we can give everybody 2 minutes back and finish on time today. Thanks, everybody, very much, and we look forward to talking to you again next quarter. Bye.